Hey, money magnets, banks have major changes coming soon. This could be the end of high limit loans, but no worries because we're going to show you how you can still get to the bag.
Look, let's dive deep into the facts. Let's go over to the computer.
Okay, Marvin. New CFPB rule caps banks' credit card late fees at $8.
Wow.
Now, if you guys don't know, the CFPB they are the Consumer Financial Protection Bureau, and they help regulate, making sure that consumers are treated fairly.
Yeah, they help protect consumers. You know what they're doing? They're closing a loophole that has been open to let credit card companies collect billions of dollars, but it may have an adverse effect as well.
I think it will, Marvin, because, that doesn't incentivize people to pay their bills on time.
Yeah. And lately, when we're looking at business owners, we're seeing a lot of business owners with 30-day lates on their credit. And you know what? That could hurt you about well over 100 points.
Okay, Marvin, let's dive a little bit deeper into this and let's go over some of the facts, because this is a major change that can most definitely help the consumer,
right,
but it also can have an adverse effect on banks.
Yes, it can.
So the article states that by cutting late fees to $8 from an average of $32, more than 45 million card users would save an average of $220 annually. That right there changes the game.
But the only thing I'm thinking, Gloria, is because now it's cutting the fee. Is that going to incentivize the consumer to be on time? Because the worst thing they want is to be late on the bill and suffer a 30-day late.
Most definitely.
Gloria, let's point out this fact. The big banks that issue credit cards have been raising the cost of late penalties since 2010.
Wow.
And the fees exceeded $14 billion in 2022, according to the CFPB. The industry profits from customers with low credit scores who rack up an average of $138 annually in late fees per credit card, says Chopra. And what I mean by that is that, okay, they're racking up these fees, but now that they can't do that anymore, now banks are merging. Let's talk about Capital One and Discover and what they just did.
Okay, Marvin, I'm not sure how I feel about this.
Yeah.
These major changes are going to affect us as the consumer, but it's also going to make the banks change up how they do things.
Correct.
Capital One's $35.3 billion acquisition of Discover set to reshape the financial landscape. That right there is major.
Yep. And if you guys have any comments, make sure you share below.
Yeah, let us know how you feel about this merger, because this right here can affect the banking industry. Like they said, it's going to reshape everything.
But let's dive deeper into this article, Glo. Gloria, this could be major for the landscape of banks. The merger of Capital One and Discover is expected to create a global payments powerhouse. The combined company will have a larger card loan value than either JP Morgan Chase or Citigroup, positioning it to compete with the largest payment companies. So because they're losing the fees from the customers, now these banks are going to merge so they can compete with the bigger banks.
Most definitely, Marvin. And these bigger banks have already started lowering their fees.
Yeah. And, we're seeing a lot of consumers get their cards closed because guess what? They're trying to stop charge-offs because right now, credit card charge-offs are at an all-time high.
Okay, Marvin. So we're looking here at a map with credit card delinquency rate.
Across the country.
Yeah. It's at an all-time high.
Yeah, this is crazy. Look at Texas at 25%. Where we're from, look at Tennessee, Georgia, Michigan. All of these states are experiencing credit card delinquencies. We're soon going to go into a recession, guys, because we can't keep going like this. After all this high spending, now this is like a retraction where people are suffering from this because they got to have their basic needs.
And Marvin, one of the things that concern me is that unemployment is not at an all-time high.
Right.
So what's going on in our economy? There are a lot of changes and new regulations that are coming down the pipeline that are trying to help consumers keep money in their pocket. But the flip side to that is, what is going to be the adverse effect from the different banks?
Yeah, I think what's going to happen, Gloria, they're going to start lowering the approvals. We've seen this in the past where they'll start cutting credit cards off, lowering the approvals, and now it's going to be harder to get credit if you don't have excellent credit. And speaking to that, if you guys are having trouble with your credit, we got a link in the description below. All you got to do is look at our AI program to help improve your credit, because you're going to need it if you're going to get credit cards and loans in the near future.
Most definitely, Marvin. And right now is the time to get yourself in position, because new regulations and different things are happening with these banks. You want to be in position so that you can continue to grow your business, scale your business, or even just keep your personal credit intact.
I agree, Gloria.
Okay, Marvin, I'm just wondering, why did Capital One and Discover decide to merge? Because Discover expects charge-offs to peak in mid-2024. So how is that going to affect their bottom line?
You know what I think, Glo? I think they're stronger together, and they're looking at it like if they come together, now they can compete with JP Morgan and Chase to get at that number 2 or number 3 spot.
Yeah, because I'm wondering, are they going to roll out some of the rules that some of the other credit card companies have, like JP Morgan Chase? They have a 5 and 24 rule where you can only get 5 new credit cards within 24 months. So I think banking is really going to change, because they're going to start really tightening up on how they're lending.
And then these fintech banks coming out where you got to show more of your income and they connect to your bank accounts, it may make credit scores irrelevant.
Okay, Marvin, let's do a quick recap.
Okay.
You know, the bottom line is having your credit on point and not missing payments is going to be very crucial to what's to come in the forefront in the coming months.
Yeah, and like we're seeing now, you got to have the best credit score. What I mean by that is 680 and above if you expect to get approved for credit cards and loans, and be prepared to have your taxes. We're seeing banks like Truist start to ask for documents, where last year they were doing no doc. And you know what happens? You know, they're experiencing defaults and charge-offs, so now they want to protect themselves.
Okay, Marvin, let me drop this gem. Okay. So one of the things that I want you to keep in mind, Money Magnets, try to set your payments up on auto pay. That way you'll never miss a payment. Marvin and I was talking to a major influencer, and she was just telling us, hey, I forget to pay my bills sometimes because I'm so busy. But she didn't understand that if you just set yourself up on auto pay, then you'll never miss a payment. And this new way of life with the fee change, it won't affect you at all.
Right. And remember, bad credit is not okay. If you're having trouble with negative items, make sure you click the link below in the description. We have an AI program that can help you with your credit. And you know what? If you need even more help, we have a whole video explaining how to fix your credit fast with AI. So check out this next video. I'm Mr. Smith.
And I'm Mrs. Smith.
And we're here to help empower your finances.